All right, we have more changes unfolding in the U.S. housing market. Changes that have Zillow now going completely off the deep end, completely cuckoo with their latest home value forecast for the 2024 housing market. We're going to look at the numbers together because we have them synced into our database, and we'll drill down by zip code this time to see how the hell they came up with this crazy price prediction. And to counter this new bullish home price forecast that Zillow just released, we have Pantheon Macroeconomics chief economist who has some choice words for them. Let's just say he throws some cold water on this, all right? You're not going to want to miss this. We cover his point of view in the second half of the video, so make sure to stick around for that. But before we get started, if you're not already a subscriber of this channel, consider subscribing. It helps the channel out, and I appreciate your support. All right, so what's going on with Zillow's research team, folks? Who are these people and where the hell are they coming up with these numbers? Their forecast I'm referring to, right? Not their actual data. Their hard data is fine, obviously. Some people don't like Zillow because their numbers differ so much from other real estate brokerages, but there's reasons for that, right? How they count inventory is different, things like that. But that's a different story. What I'm referring to is their forecasts, right? Where they put out their prediction for where they see the housing market moving, where they see home prices moving in the future. They publish this each month, all right? And they put out where they believe home values will go in the next month, in the next quarter, and then in the next year as well. And they've been getting more bullish, folks, even more bullish these past 6 months. But their newest predictions are just wild, folks, completely out there. And speaking of out there, who watched the UAP hearings in Congress last week? Lots happening behind the scenes there, right? And by the way, certain members of Congress have a lot more info about what's going on. The Gang of Eight, for instance, and the Senate Intel Committee in particular. Let me know what you think about this in the comments. But anyways, I digress. Here's what Zillow just put out for their latest national home value forecast. They say that by the end of Q3 this year, so by the end of September, home values are going to rise again another 1.6%. And by next year, June 2024, they predict values will rise 6.3% higher than where they are right now. So according to Zillow, no fall in home prices, no correction. In fact, above average home price growth is what they're now predicting, a full-blown rebound, folks. So is that realistic? Well, if you're getting worked up, try not to, because the story gets better in a few minutes. But first, to visualize this on a local level, Zillow synced their forecast to us by zip code this time, which is pretty cool. So we have your target market or markets available to see where they believe home prices will be in 1 year from today, right? So check this out. And if you want access, by the way, to the system to use the maps yourself, I put the link in the description of the video. Now, we're going to flip through them by region, all right? And this forecast has a base date, by the way, of June 2023. So not from peak home prices, but from the last day of June 2023. So here's all the northeastern U.S. zip codes. What do you notice when we look at this? There's no red on this map, folks. Red, by the way, means they're forecasting negative prices. Blue is positive prices. Here's the southeast, almost entirely blue. This means they're predicting over the next year, home prices go into full rebound mode, folks, which is funny because when we zoom in here on Florida, for example, and look at the Gulf Coast, for instance, check this out. As we hover over these zip codes, let's take, I don't know, Lakewood Ranch, for example. What we're looking at here is Zillow's forecast at the top, right? Then below it, I list the actual home prices from Zillow's home value index. This is synonymous, by the way, with most of Florida right now. Home prices have been falling here for the last 6 months, starting at the end of last year, consistent monthly drops in price. Currently, home values in Lakewood, for instance, are now down 4.5% from peak. Typical home here costs $618,000, still 60% over June 2019, 70% over where prices were back in June 2018. But if we scroll up to their forecast, they're predicting that prices reverse and rebound, saying home values will increase 1% by Q3, and by June 2024, they believe in this specific city, prices will jump 5.5% from now. And it's the same thing in all these cities, folks. Look as I hover the mouse over them. Prices have been falling, right? Consistent monthly drops throughout the entire spring selling season. Just wild. Here's the Midwest again. They're forecasting all positive home price growth for the next year. How about the Western US? Same thing, folks, predicting positive price growth throughout virtually the entire Western US, with the exception of this small pocket in Northern California. Which cities are these, by the way? Let's take a quick look. Whoa, this area has been rocked, folks. Remember, the home prices that we see down here at the bottom section here are real home values, directly from Zillow's Home Value Index data set. We have Cabello, California, currently down over 18% from peak. Typical house here is valued at $335 grand. Consistent month-over-month drops in price throughout the spring, which is the opposite of what you'd normally see. This specific city, though, has now fallen below where it was in June 2019. It's still 6% over June 2018, though, and they're predicting home prices continue to fall here. Another 1% drop last month in July, and by next year, June 2024, they predict home prices will be 2.5% lower. But overall, look at this. Overall, blue basically across the board. How about the Southwest, right? Arizona, New Mexico, Texas. Let's take a look. Again, positive price growth, they're saying, even in Phoenix and Austin, which is currently down 8%, Phoenix, from peak. So Phoenix is down 8% from June of last year, and prices here are still 63% over June 2019, 80% over June 2018 prices, but they're forecasting home prices rebound over the next year. Look at this. The brilliant analysts over at Zillow predict home prices will retouch their peak highs by June 2024. All right, so before getting all worked up about this, let me just say a couple things, right? Zillow makes these forecasts using current inventory levels. They don't give a nuanced prediction. They just use current inventory levels and home sale trends to come up with this, all right? And I'll just say, I personally disagree with them, and so does Kieran Clancy from Pantheon Macroeconomics. Take a look at this summary of the note that they published. I can't show the actual Pantheon note. It's proprietary, unlike some of the others that we look at together, but Fox Business did do a summary of it. Take a look at this. The title of their article is U.S. Home Prices Still Face a Steep and Sustained Decline This Year, Economist Warns. They write, the U.S. housing market has defied expectations for a crash so far this year, but a steep decline in prices and home prices could be right around the corner. In contrast to the widespread belief that the housing market has already hit bottom and is now in the midst of a recovery, Pantheon economist Kieran Clancy argued that the better-than-expected performance seen this spring was merely the result of aggressive discounts and a lack of resale inventory, not an actual housing market recovery. They go on to quote him saying, we are baffled by the emerging narrative in the commentariat that housing is now recovering, because it isn't, Clancy wrote in the note. Home sales jumped at the start of the year, lagging the late 2022 dip in mortgage rates, but they have fallen more recently thanks to the latest backup in rates, and mortgage applications signal that they will soon dip to a new cycle low. They go on to write, the portion of average wages required to own a home, meanwhile, has skyrocketed 33% in the period from April to June. That marks the highest debt-to-income ratio since 2007, meaning the market is the least affordable for Americans in nearly 2 decades. And to be honest, it's actually worse than that. Significantly worse in specific markets. This 33% number that they quote is a national number, but many markets have home buyers completely priced out right now. Another way to look at it is the payment to income ratio, which is now at the highest that it's been in 30 years, folks. You can see it on this chart. So regardless what happens to home prices, the reality is the market's upside down right now. Valuations are upside down, and eventually they will correct. They go on to quote Clancy again, saying this, the shift in sales towards new homes doesn't change the bigger picture, which is that a durable recovery in overall market activity is out of the question until affordability improves. He added, home sales can't recover until affordability improves, which requires lower mortgage rates or falling home prices, or both. In short, the housing market is not in the early stages of recovery. The downturn merely is morphing from a collapse in demand, sales, and construction to falling prices and housing-related consumption spending. Now, he goes on later in the piece to talk about mortgage rates. They don't really cover that in this article. His point was that until mortgage rates fall, there's no recovery possible. Now, I personally have a slightly different take. I think the real correction will start only when rates finally fall a few points, probably around Q2 of next year. Once that happens, we should see a big swing in the market, likely inventory quickly and rapidly increase. it may sound counterintuitive as you think lower mortgage rates means more buyers, right? Which is true. We'll see more buyers, but I think we'll see even more sellers. And since we're talking about rates, by the way, take a look at this. They're up again, getting close to breaking through their October high. Now, I'll leave you with this last quote from Clancy. He says this: the broader point here, though, is that the bulk of the drop in home prices is yet to come. The lagged effect of the plunge in sales points to a steep and sustained drop. The speed and scale of the adjustment in prices, in home prices, is uncertain, but the direction of travel is clear. All right, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's all right too. Press the dislike button. Either way, I appreciate you watching.